Hello guys, welcome back to my channel. In this video, I'm going to explain more about the types of candlesticks that you usually see when you are trading. We have three main candlesticks. As you can see, we have this one, which is known as the strength candle. Then we also have these types of candlesticks. These are known as the control shift candlesticks. Then we also have this last one, which is known as the indecision candlestick or the doji candlestick. All right. So the strength candlestick, usually it will be having a very small wick, or it might not have a wick at the end, right? For instance, this kind of a candlestick, you can see, right? It has got a very small wick at the top and a very small wick at the bottom, but the body is very big. Also, you have this one. It has got a very small wick at the top and no wick at the bottom. So usually the wick is this line. All right, so the body is the one that will show you the confirmed direction of the market. Then the wick will represent the rejection. Let's say the market was dropping like this, right? The market was dropping like this. Then the moment it's about to reach this area, it will reject back to the area where it once rejected around. As you can see, this area has got a lot of rejection. That's why our market turned around that area. So you need to know what these candlesticks mean, and you have to analyze your market when you have seen the types of candlesticks that you want to base with. So I usually prefer analyzing the market from H1 going to M1. You can start on a very bigger time frame, which could be the daily time frame. But if you want to trade derivative indices, you can start with H1 or H4. All right. So here you need to understand what these candlesticks mean. For instance, here we have these three candlesticks that are dropping, right? And we can see that our market was dropping well. Then it reached this area. You can see this area has got a lot of rejection, and around this area it rejected and pulled back to this zone. After that, it started to buy. So usually this is how the market will be moving, and you also need to understand the concept of engulfing bars. All right, so when I'm talking about the engulfing bars, I'm just trying to show you the concept whereby the candle will cover another candle. For instance, this kind of a scenario, we can see that our market was dropping, right? Then this board covered this one. So in a nutshell, we can say this is what this candle was engulfed by this candle. Then after that, it rejected a bit, right? Then it confirmed this small buy. If you want to see the confirmation of the direction, you base with the candlestick. So for you to know the overall direction, you need to understand more about the wicks, right? For instance, here it engulfed this candlestick, and we can see that this week the market moved down to this zone, right? But it tried to reject a bit and just put back a little bit. This is a sign that our market can promise us a huge movement afterwards. So what you can do is, when you have seen this kind of an impulsive move, right, what you can do is you can mark the area where that impulsive move started, right? So we can try to mark that area where that impulsive move started, which is this one, right? So here, this is where we are seeing a very good rejection around this area. You can see that because the market once tried to drop, then rejected, went upwards, tried to drop again, then it will reject to that zone. So this will be your sell entry. You enter your sell entry basing with this rejection. Then you enjoy a lot of profit, as you can see. So for you to know that your market is about to turn, you need to confirm with the kind of candlesticks that it will be forming. If you start to see that it's now forming candlesticks like this, you can see that this candlestick is now very small. It's a sign that the market is about to pull back. So in a nutshell, this will be your time to take profit. But if you want to hold, you can hold basing with this order block, so that you can take your profit there, right? So basically that is how you trade using this kind of a candlestick. Then we are now moving on to the control shift candlesticks. These are the control shift candlesticks. These are the candlesticks that will be showing you that around that area there's a lot of rejection. For instance, here the market was selling, rejected, and it pulled back, something like that. Usually you don't trade when there is a setup like that, because it's a sign that the market is not yet ready to go. Then we also have the indecision candle. It's known as the Dutch candlestick. It's a sign whereby the market has not yet decided whether to buy or to sell. For instance, here you can see it has got 2 weeks one at the top, one at the bottom, and a small body here. So in a nutshell, we can see that the market has not yet decided where to go. And you usually see this kind of a candlestick when the market is congesting, right? It will be ranging around this area. So there'll be a lot of congestion around this area, guys. As you can see, the market is not moving. It's just playing around the same area. So you don't enter such kind of a setups. So I want you all to maximize your entries and make sure that you enter your trades when there is this kind of a candlestick. So we'll be looking for those types of candlesticks as we'll be trading. For instance, here you can see that the market was dropping, right? Then it created this kind of a candlestick. It does not have a wick, which is a sign that it's a strength candlestick. So in a nutshell, we are saying our market is now buying. So you place your buy. Yes, it can pull back, basing with this rejection, where this candlestick rejected. You can see this board. You can draw a horizontal line where the board started around this area. Then you just know that around that zone, it is going to reject. So your zone of rejection will be this one on this week. So this is how you trade when you are using the candlesticks. It's very simple to trade like that, as you can see. So if you are new to this channel, please click the subscribe button. And if you want to join our free Telegram channel, you can just click the link that is in the description. If you want to ask more about the trading strategies, you can send a message, then I'll reply you. So what we are going to do is we want to see the overall direction of the market. So here, this is crash 500, and if you can see clearly, you can see that the market is ranging. So this is not a good time for you to trade crash 500, and you should always trade according to the trend. So for you to know that the market is now dropping, it has to cross either this zone or this zone. This is where we'll get a good confirmation whereby we can enter a very good trade.